You have an 88 millisecond problem. I know, you're probably thinking, how do you know what a millisecond is, let alone that it's actually my problem? Because we all have it. In 88 milliseconds, our brain actually begins to react regardless of our thought process. Because our thought process, it takes at least 150 to 200 milliseconds for our brain to say, hang on here, what am I thinking? And that's all the difference in the world, particularly when it comes to, for example, what it can cost you in your investing. Now, how do I know this? So there's a researcher at NYU, Joseph Ledoux. He's a neuroscientist. He's been researching our brain and what happens, how our brains work, regardless of gender, regardless of ethnicity, regardless of cultural bias. It's how our early brain is programmed. And if we don't understand it, it can affect us in very positive ways and also in very negative ways. It is, in essence, the amygdala is the fight or flight mechanism. And what we normally run into is the flight mechanism, because that is the greatest form of defense, okay, is to get out of harm's way. Now, that makes a lot of sense if we're being chased by, say, for example, a saber-tooth tiger. I'm quite sure that would be a problem. Now, obviously, we do not have saber-tooth tigers today, and I'm okay with that. But here's what we do have. We do have all sorts of influences, from our phones to our watches to whatever communication device you have, to our neighbor down the hall at the next office, whatever it is, all hijacking our brain, and we don't even necessarily realize it. Because in 88 milliseconds, just like the saber-tooth tiger, we are captured by market crashing today. We're captured by, oh my gosh, did you see what happened to XYZ software company? And with that split second, we're reacting and we're saying, well, I own some of that, or I was gonna buy some of that. Now maybe I made a bad decision, or I just bought it. Now what's happening? It's really interesting, because if we think through the work of a neuroscientist at NYU, Joseph Ledoux, not to be confused with Chris Ledoux, for all you Garth Brooks fans, but Joseph Ledoux has studied the brain and the amygdala, and actually how we process and how quickly we process and what we revert to. And we can actually train ourselves, but act better and to make better decisions in the future. But our brain actually goes to two roads, okay? Like we're complicated, okay? Because if a saber-toothed tiger is chasing you, I'm quite sure that way back when you had two roads. Either take this, dive into this hole, and perhaps, or dive up to somewhere, or jump up to somewhere else, and lo and behold, you're out of danger, or you're trying to. And the same is true today, because in 150 to 200 milliseconds, our brain actually begins to make that decision. And we've not even involved anything of our frontal cortex, which is our choices that we have, okay? High road, low road, okay? And in doing so, if we can take the time and take a step back and have a little bit of a breath and just say, well, does that really affect me? Is it really that big of a problem? Is it going to make a difference in the longer term, which is why I'm invested in the first place? And the answer is generally not, but you still have to put that information in context, right? That's reasonable, that's healthy. So there was a study done by DALBAR. They've been doing this study now for roughly 30 years. They asked the question repeatedly, well, what are market returns? Now, depending on what you'd like to look at, you can say, well, the market returns here in this section, or the S&P, the Dow, the NASDAQ, or some subsector thereof, etc., whatever benchmark you want to look at. But the question really comes down to not what does the market do, but what is the actual investor performance number? And now that's much more difficult to get to. Now, if you've ever gone to a gathering after work, or a weekend gathering among friends and neighbors, even family members, here's what you're going to find. Nobody wants to talk to you about the fact or brag about the fact they lost XYZ with MNO security. They don't want to say, wow, I was taken to the cleaners on that one. That wasn't so good. I was dumb. No. What they want to tell you is they want to tell you about how great they're doing. Okay, that's normal. So getting this information, for DALBAR to get this information and get true information takes a great deal of critical thought. How to begin to get that information, how to sift out that information which doesn't make any sense or seems to be very much on the periphery, either the good or the bad, and actually get to what makes sense. Like, these are the real returns that investors get. What we find is that investors, oftentimes, it isn't about the stocks that they picked or the investment advisor picked or the funds or the ETFs or whatever security that they picked. Obviously, you want to pick some good ones and have some solid rationale for doing that. But assuming that's the case, here's what's happened. What DALBAR found is that it's that emotion that gets into the decision that keeps the investor from actually recognizing and realizing a reward for investing as great as what the market has performed at. So if you look at the S&P 500, probably the most glaring result in 2024, which is the last time that DALBAR has reported with results, the S&P 500 was up 25+%. The average investor was up 16+%. So why are there 849 basis points different between one or the other? Or let's just say 8.5%, okay? Why is that difference there? Because what goes on in here doesn't happen when we're out there doing our trading, or we do our trading, or we do our investing, if you want to call it that for many, and then we let our emotions get in the way. We let that running from the saber-tooth tiger that doesn't exist anymore, that now has the headline taking its place, and we're making decisions. And investing is one of the strangest things, because if we go to the store and we know that the price of a ribeye steak is $8 a pound, let's just pick a number, $8 a pound. If we see it at $6, we can't get to the store quick enough. That's why you get this flyer that either comes through in your newspaper, comes through in your mail, or comes through on your email or some other app which you subscribe to. And they say, come to our store for $6 ribeyes, $6 a pound ribeyes. And you get there and you can't buy enough because you go, we actually like ribeyes and we want to have more ribeyes. So at $6 a pound, I'm 25% off, and you'll buy that all day long as much as you can. And how much can my freezer hold if you're really a big ribeye fan? When a stock or a security or a mutual fund or an ETF, when it goes down by 25%, you don't want to buy it, you want to sell it, is your natural reaction, and that's completely opposite. So there was a noted investor who recently retired, and we wish him nothing but a wondrous and healthy, prosperous retirement. He built an empire on buying fear and selling greed. And we'll put that back to the ribeye steaks. Why buy it at $8 if you can buy a bunch of it at $6 a pound? Well, he did that, and he's done that consistently, and I'm sure his proteges will continue to do that in the future. And what we hope to do is be able to help people understand the brain works in a strange fashion. There are things that we really haven't tuned out, but we can control. And if we understand what our long-term vision is, we understand what we value, we understand why we're doing what we're doing and why we're in the securities we're in, and we can actually verbalize that and have that conversation, not only with you, but with family members, and to understand what they're thinking about choices that have been made or considering to be made. We call that a full circle consultation, where we understand really who's in your world, and then how can we help make you a better investor? How can we help you have better planning? How can we help you avoid the saber-tooth tiger, if you will, and to really plan for tomorrow? And understand that the noise of today is noise. If you like what you've seen so far, please subscribe to my video channel. We'll talk through how to protect your mind from making poor investment decisions. So how does that 88 milliseconds actually affect your portfolio? And why do investors consistently underperform the market? We're going to talk about that in detail in the next video. I look forward to seeing you there. click play and we'll see you in the next video.